Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Where are we here? Tuesday? Tuesday, 12th of January, 2021. Oh boy. Well, at least we're full into the new year. It's always a privilege waking up in the morning and banging out doubles and all that kind of fun stuff. So I've been really rewarded very, very well recently. It's quite remarkable how the market just keeps surging higher. I got off another double here this morning right on the open and got into a whole bunch of names that are all just flirting with double levels. So that was just a killer trade yesterday. I got really lucky on that one. Whether it be the pod industry, I think these guys are in the pharmaceutical industry. And Kevin, I mean, that was, in fact, actually, today's fill, this was another idea brought to you by the good people of the state of New Mexico. This guy's just a killer trader. It's ridiculous. So, anyway, he'll do very well in life, I think. If he can just avoid the Beamish. Right, Kevin? All right. Where are we going to go for today? Brett's still kind of pointing up, but I'll tell you, things are looking awfully dicey out there. I'm hearing lots of, socialist talk, lots of new stimulus talk. I don't know whether I really buy it or not. I think the market itself is getting a little bit exhausted. And remember, we said that probably a lot of the prices were bid up there as all the GOP Republican people were all run out of Washington there, and they all just exited the market. Talk about an exit pump, eh? I don't think you could get a bigger exit pump. I was showing the people through the daily brief today. I'm actually working away on building out tools for site members to use Sjord's awesome screening engine. So this is one page. This is looking at the breadth of the entire market. So I can get a pretty good snapshot of everything that's sort of going on in the world. We got both Canada and Australia for our commodity proxies. We got the U.S. market. We got the European stock market. We've got your top crypto market. We've got the entire crypto universe. And we got our bases covered. You can see I'm still filling out some of the tags list. But I got to say, Sjord's delivered. This was an incredibly huge project to pull off. And as I build out these tools, I'll probably be talking more and more off of these kind of pages. So, the future's pretty bright for the principles of TRI, I suppose. We'll see how it goes. Unfortunately, I think it's going to be a bit of a challenge getting through all this social anxiety, getting through, we're definitely going to have to go through some sort of recessionary reset through here. The Democrats in Washington have carte blanche. They got a blank check. They can do anything they want now, which doesn't usually translate into higher stock and risk asset prices. So be forewarned. Your little market matrix, sort of one little be forewarned. U.S. dollar trying to reverse here. Brian's usually early. I'm going to say I'm often right. I like the idea of the U.S. dollar rallying here. But this might take some time to get through, political transitions, all that kind of stuff. And really, I'm a U.S. dollar bull now for the next 15 years. A long time. And interestingly enough, I'm actually a commodity bear for the next 15 years as well. And what's interesting is to see these pretty well-defined tops coming in on the commodity currency. So I went and hit the Canadian dollar there the other day. And we'll see how that goes. Options trade, long dated, no hurry whatsoever. Really, I don't even have a problem if the option goes off the board. Because it's just, I threw a few $100 at the option. Could it turn into a few thousand? I mean, you tell me. Has that got any room to come down? maybe. If the market does keep working its way higher, trust me, I got lots of long equity on the books, like this kind of stuff that will just keep paying me if they just want to keep taking the fugazi higher. That's the way I kind of approach my portfolio management. Is I like to have insurance. So I've got insurance in a bunch of stock bear ETFs and some bear put options, or I guess call options on those bear ETFs. As well, US dollar calls, Canadian dollar puts, and then I've got a bunch of equity on the books. So, yeah, it's a nice balanced approach, and I gotta say, man, I'm even proud of myself, the amount of money that I've taken out of the market, and most of it's in cash. In fact, I think my goal was to get my portfolio entirely out of the market and only have equity that's free, stuff that I sold half on double, right? And I got all my original money back. I'm getting pretty darn close. The number that I started to work with in January is about 80 grand. Let's see where we are now. I put about 20 into the market. You know me, I'm chicken shit. I don't like to take risk. And right now, Jesus, it counts 121. And I've got, what do I got here? 77,315 in cash. So I only got to farm another 3 grand, and the rest of it is all free. Now that's how you play from a position of strength. And the funny thing is that equity, it could be 10, it could be 20, 30, 40, 50x. And what's fascinating, right, is even while I'm sort of hedging and not really too aggressive in the market, here's stocks, the fluorite industry is going crazy again. I mean, how do you explain that? I thought you said commodities were going down. Well, this is more about like VCIM and buying like good structured stocks. And just killing the market. Here's another VCIM name. Look at this. This is crazy. This is classic January barometer, or January effect, beg your pardon, January effect, where, once we get to the end of tax loss selling season, which is usually the end of December, right? The last day you can do tax loss selling is like, I guess somewhere in here. And, all through this kind of period, right, they're just selling it, dumping it, didn't work, right, tax loss. I made a bunch of money somewhere else. And then all of a sudden, that tax loss selling pressure disappears and pop, away she goes. And I mean, look at that chart. It's just so pretty. JoJo, she would call that pretty, pretty, princess pretty. That's a damn good looking chart. And there's a bunch of names that we're invested in that look like this. This is what you want your chart to look like if you're thinking about coming in on the buy side. We can look at a Bitcoin chart and we can identify when it did look like this, but it doesn't look like this now. That's for damn sure. So anyway, kind of funny to see VCIM names just killing it here. So I might get some more doubles off here. Still got a ways to go on this bad boy, but this one, I'm not quite sure. I might have to go, see, that's where I bought for TRI. What's that? 12, so 24, 48. Oh, so I must have gotten some off in that. I'll see where it goes. I mean, hell, show me a high, show me a new high, and I'll show you a buy. So, there are pockets of fun out there. Interesting, though, like a broader market. S&Ps are down 0.5 point. I mean, we had sort of mused about how that was a very weird candle in there. It turns out that, that wasn't the top. I would imagine if we started looking at things like momentum indicators, we're just, you got little smatterings, but, geez, Willie stupid. I mean, there's no way in hell I could buy an asset that looked like that. And there are a lot of risk assets that look like that. So, actually, these bear proxies actually were all moving up earlier this morning. Kind of calmed down a little bit. And Canada stock market just going sideways here. So it's not really like the big indexes are doing anything. This feels to me like a value-driven market. I think I've used the expression with you before, stock pickers market, coin pickers market. It's one of those. Like here's an example. That chart doesn't look like the S&P 500. That looks almost exactly like the other idea that I just showed you. What was that other idea? I don't know. Can't even remember. And actually, it was interesting. We finished off the daily brief with an altcoin that looks exactly like this. This is the kind of shit you want to be investing in. But hey, I'm not here to tell you what to do with your money. You do with your money, you please. For whatever it's worth, I'm long a bucket load of this. And I'll take another bucket if you happen to have one handy. But I'm not going to pay $1.11. I'll be more than happy to buy you off here down at 70, 80 cents. Actually, I was quite pleased to see, things like little bot setups and tech stocks we put on recently. They're just working away. But, like the metals. And this is the funny thing. I can't quite understand this, right? Our little airy strategic mining cranking to new highs. But, yeah, you look at the big stocks. We're kind of worried about gold there the other day. I did strap on a little bit of silver, but you can see now it's underwater from where we bought it. We kind of talked about this. I mean, these big stocks, that looks like crap. So, yeah, I got a little bit of this on the books. My stop's down here, but I'm not really going to do anything there. Just let it work. And the oil stocks, they just keep ratcheting higher. Kevin and his whole crew of veterans, I think they were in an oil stock, what was it, US or something like that? Kevin told me the symbol earlier. I can't remember what it is. U.S. Well Services. This is it. So these guys, I've told you before, I don't like oil. And that's fine. I mean, it's just an opinion. But this is the name all these guys were all over. I tell you, these TRI stock people, they're fucking getting good at this. We've got one lady from Arizona in the group, Colleen, who we absolutely love. You probably heard me talk about her before. And she said she got an 8x off on this move. Congratulations, Colleen. You will be a pillar of strength for us going forward. And if I'm not mistaken, I think this was Kevin's idea. So Kevin is just, it's remarkable how many ideas he has. The guy's just, he knows his shit. He's ready to go prime time if he wants. It's just a question of whether he really wants it or not. Man, some damn fine trading coming out of the TRI people these days. Very impressive. S&P 500, big hurry up and do nothing. Might even carve out a nice little inside bar failure there, a fractal top, eh? Oil, can't figure out what the fuck's going on there. That was actually interesting. I heard politicians coming out going, ooh, the oil price is nice and high. That's a good thing. I was like, what? And they're like, well, all of industry will be happy. Seriously? In Canada, of course, yeah, because half of our future is mortgaged to this silly tar sands nonsense up in northern Alberta. And thank heavens at $52, $53 a barrel, I think they're back above water, so I'm sure they're all happy. But I can't quite figure out why that oil price is going up the way that it is. Doesn't really make a heck of a lot of sense. That might be an exit pump too, so just be aware of that. Mr. Bond King. Mr. Bond King is kind of feeling a bit of pain these days. I'll tell you, this bond chart looks very, very troublesome. And that's the one thing that'll absolutely derail the whole sort of modern monetary theory nonsense, is what happens if money actually starts costing us again, i.e. interest rates are going up. That's basically what interest rates are. It's the cost of money. So while we were in this period where the cost of money was almost nothing, all this MMT nonsense comes up, right? My government can print all the money it wants. What? Are you serious? I don't think that's true. I think that the market at some point is going to have enough of the runaway deficits and just runaway spending of the U.S. But here's the kick in the pants, and this is what's bothersome, is the U.S. Federal Reserve has officially changed its policy since 1979. They've had an official policy that they were inflation hawks and that they wanted to fight inflation. And just a year or two ago, through this, they officially changed their policy saying inflation is not bad. And we even had Mr. Powell recently come out, two things that kind of shocked me. Number one, looking at this picture, he was like, well, the Fed is okay with rising yields on the long end of the curve. Uh-oh. What did he just say? The Fed is okay with rising interest rates. The Fed is okay with the cost of borrowing going up. That means the cost of borrowing is going to go up. This is actually determined by the market. The Fed has absolutely no control over this. So, yes, people will say, well, they'll go in and buy bonds. But trust me, if the market really wanted to break, they would break the U.S. government and this bond market would collapse, and it would be to the tune of like tens, if not hundreds of trillions of dollars. They go in and they plug the dike with a trillion here, a trillion there nowadays. Like, what the hell is $1 trillion? But, if the market really believed that the Fed lost control and we were in like a hyperinflation kind of period, man, these things would fucking collapse. But I don't think we're in that. But more importantly, and this is the message I'm trying to convey to people, is that, stock market's getting bid up under the premise of a low cost of money environment. That environment's changing. And one of these days, the stock market is going to look over at the bond market and go, oh, shit. You mean the cost of borrowing isn't free anymore? Uh-oh. And usually on that day, that's when the stock market breaks, right? And everybody goes, oh, Jesus Christ. And, the problem here is that even Powell himself said, well, I'm okay with stock valuations being the way that they are given the historically low interest rate environment. Well, if that's changing, then what he's basically saying is, well, if this is going from the upper left to the lower right, which it clearly is, and making M's and smiling at us, well, should we be thinking about ever-increasing stock prices, given what Mr. Powell just said? I don't know. And, I was even going through the Daily Brief today about this. I mean, the anxiety level around the world. I watched somebody blow themselves up yesterday. I think they lost about 50 grand in about an hour. Boom! I'm having a tough mental time right now. I'm trying to be a good person, but I can even see in myself I'm fucking up right, left, and center. The one good thing about me, and I tried to tell this to the community today, is I'm like one of these best practices kind of guys. So I really, when it comes to risking money, I obsess about following the process and everything that I sort of try and teach you guys. But, like interpersonal relationships and stuff like that, oh, God, I'm not doing very well these days at all. So, wish Brian luck. I need it. It's going to be a bit of a slog getting through this mess, that's for sure. I will watch the silver and the gold markets, and especially those big stocks, as my cue as to whether those markets have actually broken or not. I'm not ready to say that they have completely broken. And really, kind of like the Bitcoin story, I kind of think we're going to do things like, if we look at the S&Ps, there's the 38.2. We're probably going to pull back to that and then do a whole bunch of sideways for a few months. That's probably the same thing that happens on things like the corn. And, we get to that point where the stock market goes, hey, shit, the bond market's not very happy. And it starts its 38.2 correction. Has Bitcoin started the 38.2 move? And this now, I think I've shown you guys in the public videos thinking about sort of what the last fear cycle looked like and how did that end and what were some proxies that were followed through that cycle. Should we see similar behavior? Jesus Christ, look at that goddamn warrant these kids bought. Ugh, what a trade. That's this kind of conversation. I think, ironically enough, when I did this video on Wednesday, oh, what time is it? Yeah, okay, I gotta wind this up soon. When I did this video on Wednesday, or Saturday, or whatever the hell it was, I had said that we were right here. Well, maybe on the Bitcoin market, we just had this move here now. I don't know. It just seems awfully cliche. I mean, just remarkable. The more things change, the more they stay exactly the same. So I wouldn't be surprised if crypto has a little bit more up in the gas tank left, though. Just because we've got that big Ethereum event coming up in early February. Once that's done, though, I don't see any reason why crypto would rally. You know, there just aren't any fundamental drivers ahead of it. So, seeing us banging out doubles on the little junior stocks, and I showed you a bunch of charts. You know, the junior charts, they look fucking awesome. Senior stocks, they don't really look that good. And that's basically what this Russell 2000 indicator is telling us again. You know, small caps, that's the place to be. So it's nice, you know, enjoy the weather while it lasts. And, you know, the irony of it all is that actually might be a very similar story in crypto. Because, you know, as I said there a moment ago, I can't come in on the buy side on something like Ethereum here. That's crazy. But, you know, there were names. You know, we were looking this ZEC. I mean, I don't know what the fundamental story is. If you can find fundamental driver on a chart that looks like this, hey, they're doing this, or there's this coming up, or we've got a catalyst for this meeting, or this launch, or this, you know, whatever. Some sort of fundamental driver. Throw that on with the fact that you've got W's working at location. I think there's some divergences. You can see we're basically getting in where the smart money's long. Those are the kind of names that I can invest in. But I can't come in on the long side here. I just can't do it. I'm sorry. And if anything, as you can see through the daily brief, I was sort of illustrating, okay, well, maybe you dollar cost averaged your way through all this. Maybe you bought the W. Maybe you were a killer trader like Kevin and you were buying these kick-ass levels on tests of lows, whatever. The point here is as we go into this market state, now you actually have to start paying yourself for all the hard work and time and effort that you put in through here, staying focused, patient, disciplined, 50% rules as your ultimate objective. And I remember specifically, there's a popular guy on the net called Da Vinci. He and I did a video right here. And we were just like, you know, at some point, this market is going to trade back to that 50% rule. It did it. Now, do you sell everything at that objective? That's up to you. But I love the idea of just spoon feeding, and as the market works its way higher, you know, maybe it's sell half on double strategy. Maybe it's a sell a third on a triple. I don't really care, but just pay yourself as this thing's moving up. Can't come in on the buy side there. Sorry. As I showed you, I mean, you can see if your chart looks like this, awesome, rock it. So, you know, you should look at a chart like this and go, well, I guess I can understand why those TRI guys are coming in at the bottom end of ranges. You know, they're getting paid. That's just what we do. So, you know, this tough belt here, this was an idea by an old TRI OG, Jamie. Beautiful chart. Looks kind of the same as that Ethereum chart back at the bottom. And if this thing goes ratcheting higher, I'm going to pay myself as we work our way up. So, yeah, I think that's basically the market state. I think I'm going to leave the video at that. So, you know, PMA for the win. We got a new school term up and running, so way to go, everybody. Thank you very much for your trust in TRI. You know, slow and steady wins the race. Try to play from a position of strength. Don't take no wooden nickels. You know how the story goes. All the best, and bye for now.